Hey everyone, welcome back to the channel. Today, we're diving into one of the biggest questions on everyone's mind. What's going to happen to the US dollar in the rest of 2026? With all the economic uncertainty, interest rate changes, and global events, a lot of Americans are worried about the strength of their dollar. Will it keep falling? Will it bounce back strong? Or will it stay relatively stable? In this video, I'm breaking down the latest expert forecasts and what it could mean for your wallet. Let's start with where we are right now. As of mid-2026, the US dollar index, or DXY, is trading around the 97 to 99 range. It already had a high this year near 99 and has been showing some weakness lately. Most major banks and analysts expect the dollar to face pressure throughout the rest of 2026. Many forecasts show the DXY potentially dropping into the low 90s by the end of the year. Some even see it testing as low as 92 to 94 in the second half. Why is the dollar expected to weaken? The biggest reason is the Federal Reserve. Experts believe the Fed will continue cutting interest rates in 2026 to support the economy. Lower rates usually make the dollar less attractive to foreign investors. Another key factor is the strong performance of other economies. As Europe, China, and other regions stabilize, money may flow out of the US and into other currencies. Government spending, inflation trends, and possible new tariffs are also playing a big role. Some analysts predict a V-shaped year for the dollar, weaker in the first half, with a possible recovery later. However, not everyone is bearish. There are upside risks for the dollar. Strong US economic growth, especially driven by technology and AI, could keep the dollar more resilient than expected. Energy independence and massive government infrastructure spending might also support the greenback. So, what does this mean for regular Americans? If the dollar weakens, imported goods like electronics, cars, and clothing could become more expensive. Travel abroad might cost more. On the flip side, US exports could become more competitive, which is good for American companies and workers in those industries. If you're holding mostly cash or dollar-based assets, this volatility matters. Many experts recommend diversifying into stocks, real estate, or even some international assets as a hedge. Gold and Bitcoin are also often mentioned as potential protections during periods of dollar weakness. Here's the bottom line. The consensus for 2026 is a choppy, mostly weaker dollar with risks on both sides. We could see the DXY trade between roughly 90 and 100 for the rest of the year. Nobody can predict the future with 100% certainty. Markets can always surprise us based on new data, elections, or global events. The smartest move is to stay informed and avoid making emotional financial decisions. If you found this video helpful, please hit the like button and subscribe for more honest money and economic updates. Drop a comment below. Do you think the dollar will get weaker or stronger by the end of 2026? I read every comment and love hearing your thoughts. Thanks for watching. Stay smart with your money, and I'll see you in the next video.